We know there's not enough electricity. We know there's not enough materials and stuff to get this all going. We know that the money is being invested to get that stuff. All right, we know that. So therefore, okay, the easy trade, not the easy trade, but the trade is put your money where the money is being invested and get your money out of the place that's getting wrecked, right?
Yeah.
And that has been working, more importantly, right? That the theory
Mhm.
sounds good, but that also the tape is telling you that's working.
Plenty of macro still driving markets with either tariffs or doomsday type scenario discussions from different research outlets. We're going to talk about all of that, how that impacts the current market, how to really think about AI going into the future, but from a market perspective, not just doom or gloom or everything will just be wonderful type of scenario, as well as some individual stock ideas that we're watching. And we'll follow up from what we spoke about last week. But we're back here again this week. I'm Matt Caruso, my co-host and friend, Jason Shapiro. Jason, how are you doing this week?
Can't complain, man. Can't complain. Another day, another week. Same old, same old.
Well, speaking same old in the market, it's been an interesting couple of days, particularly Friday and I guess today to some extent. But I thought Friday was really interesting because we've been talking about how about a week or so ago there was a really big down day on the market, and you're saying that was kind of a change of character, and maybe we're going to break lower. I thought Friday was interesting because we had PCE, which is the Fed's favorite inflation gauge, come out higher than expected. GDP was weaker than expected. The tariffs were struck down, and then Trump got angry and how he has even more power now because he can license and all the other kind of the implications of that ruling and how he was viewing them, and brings up a lot of uncertainty. But besides all of that, market still had a good session on Friday, fairly strong. I think under the surface, was really nice, which we can take a look at some charts in a minute, was that a lot of the growth names, the kind of the more risk on names, were very, very strong on Friday. But today there's quite a bit of a downside reversal in the market. But how much of that is due to tariff anxiety? There's been a report that's been really circulating a lot from Citrini Research where they talk about a 2028 scenario where AI basically unravels the market, the economy, and everything else the Mad Max doomsday scenario. I'm curious, before we get to the current market today, how did you view the Friday strength in the face of what seemed like a bunch of bad news? I thought that I was looking at that as a kind of a bullish news failure. A lot of the stocks I've been holding are having a great Friday. Many of them still holding in today. We can bring up some charts. What did you think about Friday? Did that change your point of view at all?
I thought the market was stronger than expected on Friday, all things considered, and that looked good. I think the issue with all of this tape reading, as someone who considers himself to be a tape reader, is that we're just still in a range. So this is what
Mhm.
happens in a range. The tape looks good one day, right? Looks horrible the next day. Looks good one day. Looks horrible the next day, and that's kind of where we are. I still see last Thursday as the most important day. Until we break out above the last Thursday high, I'm not convinced of anything. And quite frankly, until we break below the last Thursday low, I'm not convinced of anything, right? Um, that's really what I think.
Mhm.
That's my number one thought. Um, so in the meantime, I still think, as I was saying last week, the market thing is not really the trade now.
Mhm.
I really think the long short thing is the trade now. And the relative performance of things is the trade now, and has been obviously for pretty much most of this year, right? We all see these statistics of the dispersion between between different sub indices and different sectors and different stocks is huge, right? And I,
Record breaking in
and
many
yeah,
cases.
records, and I don't think that's going away. Um, been saying it for a few weeks, and it hasn't gone away to this point, and it continues. And I think it makes perfect sense given the backdrop of AI, right?
Mhm.
Um, a lot
Well,
of uncertainty out there, right, as
yeah.
to what the future is going to look like, and with uncertainty comes, volatility. Volatility is a function of uncertainty, right? So I think it makes perfect sense, and truthfully, for stock traders, I think it's phenomenal
Mhm.
because it's been phenomenal, you know, and I have said many times, I can barely spell AI. I don't have a degree, or have I even ever taken a class, for that matter, in physics. I don't know how to program a computer, right? I'm lucky if I can get on the internet, right? And yet, you know, it's not that hard to figure it out. It's disrupting. The way I see it is, we went through a period about 30 or so years ago where everything kind of changed. Where up until that point, I think you looked at a company, and what a company did was invest a bunch of money in equipment and plants, and people, and all that investment went into building a product, and they sold that product and they got a return on their money. And a good return was seen as, 15-20% on capital. And then once computers got serious and the internet and all that, it changed. It all became IP, which did
Mhm.
not take plant and equipment and people. One guy sitting at a computer could create this, something like software, which was all IP, and make not 15-20% return on capital. You can make hundreds of percent return on capital, right? And that changed everything. And that's why these Qs and the tech stocks have way outperformed the so-called old economy stuff for 3 decades at least, right? And now it seems like, ironically enough, that's changing back. Now the IP ain't worth anything anymore, we're told, right? Because AI is taking that away, right?
Yeah.
And what is worth something are these old economy stocks, because you can't have AI without the old economy stuff.
Mhm.
Without, AI can do a lot of things. Okay, it could disrupt software, it can make all these things irrelevant for all I know, right? But it can't mine gold. It can't mine silver,
Yeah.
right? Maybe it can. I don't know. Maybe they can figure out how to make, they figured out how to make fake diamonds, right? Maybe
Mhm.
they can make fake gold and fake silver and fake, I don't know. But to this point, from what I understand, that it can't do that. So it's like this huge switch, just like we had 30 years ago. We had this huge switch from the old to the IP thing. Now we're switching back from the IP thing to the new. And
I
I don't think that, given that it's been 30 years at least of change, I don't think that in 1 or 2 months that investors' money can switch back the other way that quickly,
Well, it's
right?
funny you say
They're
that though,
way
because
underinvested in that shit, and they're way overinvested in the other stuff.
if you take a look though at the speed and the decline of let's say the software group, which is IGV here,
Yeah.
I mean, it's kind of like, we're giving back years and years of outperformance in very short order. Like this is moving fast. If you take a look at individual names like Intuit, which are anything that provide these different services or
Well,
that are
how many years? I don't know if you're able to do this, and I don't want to put you on the spot, but can you do IGV over, I don't know, Dow Jones Industrial Average?
sure, take a look. What we've given back, we're back to 20. Let me put a weekly chart
All right,
here
but
for
go back 30 years.
we can go back to this 2000. So we're still quite a ways, but we gave back really, we gave back almost half of the outperformance over
Yeah.
15 years and a
No, it's happening
couple
quickly,
months.
and that by definition, the AI thing is happening very, very quickly, right? Everything has happening very quickly, not just the investment side of it, but the real side of all this stuff. I mean, everything I can see seems like every week there's a new thing coming out with this stuff. It's incredible. I think Musk called it like the tidal wave or something like that, or tsunami, something like that, right?
Mhm.
Um,
But one thing that
it's
stands out to
happening.
me, Jason, that's very, very that I try and look at from the optimist side of things, not just for the sake of it, but the market's holding to think that the software group has fallen this far, this fast, and the triple Qs, which are tech heavy, of course, to have gone sideways. To me, that's kind of like it's almost unbelievable. If you said, "Hey Matt, this is what IGV is doing to start 2026. What are the Qs doing?" I'd say, "Oh wow, it must be like a serious deep bear market,"
Yeah.
and they've held up really well. I don't know if ultimately we break down, but so to your point, to the dispersion trade, for those who are unaware, basically means the market doesn't go anywhere, but the individual components are having dramatic moves. I think it just describes the environment we're in. I think it also speaks to, you can have these systems that you put in place, these automated systems, which can do well for a long time. And then after there's a new catalyst that just you couldn't have imagined that totally breaks your system or so if you were kind of always saying, hey, if the stocks are too wide from the index, you can short the outliers and go along the index. And then suddenly a trade like that could make you money for years can break very, very quickly. But looking at the individual market, what's interesting to me though is this is, I think, still very much neutralized in that space. Because if we take a look at, let's say, the JNK ETF, which is one of my favorites to get a flow of liquidity, look at high yield bonds, they're still strong. So it's like the stresses haven't expanded out to the bond market. They don't seem to have expanded out into the economy. I think it's everyone just kind of freaking out and not knowing how to position when suddenly these business models, which had the highest margins, maybe go to the lowest margins, which is like a big, just like overnight flip for these different
No,
stocks.
and I think that there's a lot of problems psychologically for traders with that, and that people probably want to buy the dip in software, right?
Hmm.
Because that's what's always worked, you know. Um, and meanwhile, it just keeps going down. Been hearing about buy the dip now for a good 2-3 weeks, and meanwhile, it just keeps going down, right?
Yeah.
Buying dips in Microsoft has made you a bunch of money for decades, right? It's just the time that it's not going to. I don't know,
Hmm.
but I feel like people are buying a dip. I don't like it. And I don't care either way, right? You just go with what's working, as we always
Hmm.
talk about, right? And this is
Yeah.
not what's working. Maybe at some point it does start to work, and if it does, then go with that. But just this is one of the biggest mistakes that people make always and forever. You see it in all these things. You see it. You've seen it in Bitcoin now over the last couple months. Just because they like it, they want to buy the dip, right? Tudor had that big sign on his famous, video, that big sign right on his desk, right?
Hmm.
Um, Losers add to losers,
Yeah.
right? And this is what you don't want to do, right? I promise you. Does it work sometimes? Yeah. But over time, it's not going to work. So if you want to buy the dip in, I don't care, Bitcoin, if you want to buy the dip in software stocks, if you want to buy, I don't care what it is. I say it every day. Let the market agree with you first and then do
Hmm.
it. Okay. It's not agreeing with you. Don't fight the damn tape. This has become like my mantra every conversation I have, because I just don't get why people want to do it. I guess I kind of get it in a way, because you see it now just so pronounced in the Bitcoin world, because you have so many people that are so emotionally tied to Bitcoin being the thing of the future, and there's no doubt about it. And, so therefore, if it comes down, all you do is buy. And look, they might end up in the end being right. Okay. I don't know.
Hmm.
But that doesn't mean that you do it that way. I keep saying, if Bitcoin's going to go to 1 million, the first thing it has to do is start outperforming. So why not wait for it to start outperforming? Okay, so you don't get it at 60, whatever the hell it's at now, 65,000 or whatever it's at, right? You get it at 70,000 instead. Is that going to make a difference
Yeah.
if it's going to 1 million, right? Because you would have been saying this ever since 90,000. You would have been buying it, right? And 85 and 80 and 70. And if you had just waited and still started showing some relative strength, to use your favorite word, right? Then you would have avoided this whole thing. You have to fucking stop doing that. I'm begging people, right? And it's like, what do I care what people do? Well, this is what I'm doing with my life these days, right? I'm out here trying to help people to understand and to learn how to trade markets, right? I'm begging people, stop doing that. Let the freaking market tell you first before you do anything. Stop being so greedy. And you have to get the low tick, all these famous sayings. There's been more money, lost trying to buy the low tick or sell the high tick than anything in history. And
Yeah.
that's exactly what's going on, right? So we can talk about the macro of it, right? And the IP versus the old economy. And it's very interesting conversations and all that, right? But we don't know. That could be wrong. That could be complete bullcrap, or it could be right, or it could already be over discounted in the market, or it could not be discounted enough in the market. We don't know. But what we do know is the market's going to tell us. Right? The market will tell us. And even getting back to your thing about the spreads, in my view, which I can tell you right now, Could be completely freaking wrong, okay? But in my view, when I look at it, I think that's the single most important thing there is. All
Hmm.
right. Because all of this AI stuff at the end of the day, we're talking about all the changes and all the trades being made based because of what's happening with AI.
Right.
Okay. That's assuming that AI is going to go down the path that we assume it's going to go down.
Hmm.
We know there are shortages. All right. We know there's not enough electricity. We know there's not enough materials and stuff to get this all going. We know that the money is being invested to get that stuff. All right. We know that. So, therefore, okay, the easy trade, not the easy trade, but the trade is put your money where the money is being invested and get your money out of the place that's getting wrecked. Right.
Yeah.
And that has been working, more importantly, right? That the theory
Hmm.
sounds good, but that also the tape is telling you that's working. But that's all dependent on the availability of capital to do this, right? So that's why I think the spread thing is so important, because if that flow of capital somehow runs out, then you can't do any of it. And then the whole world is going to change drastically based on the fact that everybody is now investing on this theory, right? And that's where you have big changes. So that's why I think watching these spreads has become, to me, on a macro basis, the single most important thing there is. And look, if they do run out of money, meaning let's say the spreads start widening and all that, right? Well, you know what's going to happen. They're just going to print more. Okay. Um, but then what? And I've been saying this for years under a different context, but it's just as
Hmm.
relevant under this context. If they need to print more money, okay. And they do. Okay. But then what? How does the market react to that? Because what happens if the markets react poorly to that? Then we got a problem. Then you're just pushing on the string, right?
Well,
It's all
but
great if the market reacts well to it, then everything's fine and hunky dory. But at some point, I always say it, there's a limit to everything in life. As I didn't take physics classes, but I understand the physics tells you that. Um, And that includes the amount of money that can be printed before shit goes down, right? And I don't know if we're close. I don't know if it's this year or next year or in 40 years. I don't know. But again, the market will tell us if we get to a point where spreads widen and it becomes hard to get this capital they need to do all this. This is going to be the biggest investment in the history of mankind, right? If they can't get that capital and they print more so that they can get that capital and that printing doesn't work, then we got a problem. So that's why
yeah.
watching that stuff is so very, very important here to me.
But your argument about just following the tape, I brought this chart up of NBIS because they are what they call the neo clouds. So they basically they get all these GPUs together and provide easier access for people who want to build models. This is one of my good trades of last year rather. And they were like, $15 billion company scored like a $19 billion Microsoft contract. These crazy things that basically that's why this was went from 40 up to 140 basically. But then right around here, around October, November, they kept talking about within the space, new contracts, new deals, and the stocks stopped going up. And so, it could be the best story in the world. And until if it's not reflected in the market or the market no longer responds to it, that's the key point that we really got to focus on. And so when we look at this report that everyone's been talking about, let me bring it up just for the sake of it. Um, where is it here? Where he calls it the, 2028 global intelligence crisis. And he talks about how basically the economy is going to unwind. There's some really, I mean, there's some good arguments in here. The one that let me just kind of bring up the chart that kind of explains his arguments is this one here, this like doom loop that we would be in. We're in a typical recession. Let me see if I could zoom in here a little bit. In a typical recession, the recession itself will like offset and help to kind of cure things. But in an AI driven loop, he's saying basically the companies lay people off because AI is more productive, and then they have to get leaner because they have less people buying goods, and it creates this doom loop of AI. Is it a possibility? And he starts off apologies. It starts off this thing saying this is not just like pessimism or it's just a possible scenario. But the reality is it comes out so negative, and it causes a lot of fear. There was an author, I think his name was Dent, where in 2000 he was talking about how the Dow was going to be going to 50 or 100,000. And then in '09 he was talking about how like the next big crisis crash is going to happen, which was just reacting to what was the narrative of the time and these really big outlandish type of titles. The reality is, if you go back, there was Malthus theory. For those who don't know what that is it was one of the original like kind of economists out of England, where I think it was like the 1700s. And you're saying there's only so much produce you can get out of the land. There's only so much you can farm out of the land. There's only so much farmland in the world. So we're going to hit a population limit, then we can't grow anymore. And it was the existential crisis he was talking about. He didn't factor in productivity. And so look, is this time really different? I don't know. But if you go back and you think about when the tractor was invented, all that kind of stuff, there was no knowledge economy like he's talking about. Now everything was just agrarian and all the rest, and that was going to be the end of the world for everyone because now tractors are going to be able to do the work of, I don't know, 100 men or something like that. So, but before we kind of get into this doom loop of worry and uncertainty, I mean, the queues are holding up amazing despite what is happening in software. And to be very honest, like he says, he talks about 2028 because that's when things finally go bad. And first, there's this kind of big boom and all the rest by people gaining productivity. The problem is most people, even if that does come true, will get bearish from now and miss the whole boom. I keep hearing everyone worried about the .com top and the bubble. Well, if I could live through the 90s first and make all that money before the bubble, I would very much like to take that. Then I can go to cash sometime in early 2000 and avoid the big kind of 80% drop in the NASDAQ. So I just
Nobody
find
did that.
focus.
Nobody did that though.
Yeah, well, at least hopefully some, like to some extent, but
I don't think anybody did that. I remember I was in the middle of that, and the people, I always say, the people who are willing to hold those internet stocks through, especially through the last year of it, okay,
Mhm.
clearly were not paying attention or cared about things like valuation.
Right.
All right. So there was no reason to ever sell them because
Mhm.
any reason you would have sold them way before they topped because
Yeah.
they were ridiculous way before they topped. Right. So if you didn't sell them then, you were never selling them. And I
Well,
knew
the
people.
tape did change eventually in 2000. The tape kind of turned, and you had. I'm not
The
saying you get
tape
top
changed.
pick,
No,
but
but there were tape changes along the way. There
yeah.
were some pretty nasty moves down along the way. The summer I remember of '99 was not
Mhm.
pretty. There was an LTCM thing in I think '98
That
or
was
something that
98. Yeah.
wasn't pretty. Would have been very hard to sit through that stuff. And if you did sit through it, then you sat through it. I knew people who did that, who were on paper multimillionaires,
Mhm.
um, and lost it all.
Yeah.
I knew this woman who worked for Nortel Networks. She was a big salesman there. They're paying her in a lot of different stock and stock options. She must have 40 million. She was our age, which at the time was late 20s.
Mhm.
She had tens of millions of dollars in stock options and she didn't sell a single dollar of it. You know what I mean? So anyway, that's neither here nor there. I think the point with this Trini thing to me is this is where we all get caught up. And I get
Yeah.
caught up too in my own bullshit. All right. I can tell these stories and I can tell my theories, and it's all very interesting, at least to me, right? It all sounds very interesting. And somebody, you have enough people telling stories, somebody's going to be right. And, what I mean? And they'll point themselves to as being genius for being right, right? Something has to happen. The
Mhm.
future has to look like something, right? So you have enough theories out there what it's to look like, someone's going to get it right. But knowing who,
That's the
knowing which
analyst versus the
one.
trader. That makes a difference, right?
Yeah, like you don't know. Nobody, I'll say it for the millionth time, nobody knows what the future is going to look like. There's so many different moving parts that react
Mhm.
to each other that there's no way to know. Is this one possible one that these guys are talking about? Sure. Does that mean it's going to happen? Hell no. It's got just as
Mhm.
much a chance as anything else happening for that matter,
Mhm.
right? If history has taught us anything, it's taught us that. Nobody knows how to predict the future, right? And just because somebody did, like I say, somebody has to because there's a million people making the predictions. So somebody has to, right? But there's no way to know before which one it's going to be. So it's all interesting and it all makes for great conversation and yada, 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 yada. But I'll say for the billionth time, it's all bullshit. And whatever's going to happen, the tape is going to tell you first. As traders, okay? As traders, as analysts, it's a different thing, right? As traders, the tape is going to tell you first. I promise you, it's going to tell you first. It's telling you now, and you go with it, and there's the narrative, and you go with the tape, and then the tape changes. So you have to change, right? Okay, now the tape is telling a different story. Right now, the tape is telling us this story of, you have to buy where the shortages are, and you have to sell where the disruption is, and that's working, and that's all that matters. At some point, maybe it will start telling a different story. and
Mhm.
then you change. You put on a different trade. But look at the even some of these names that you have been talking about for a long time now, right? Look at Corning today.
Yeah, wild. Beautiful. Just this has been rock star for me so far. Yeah.
You know, like that's the shortage trade.
Yeah.
You know,
But there's
um,
many of these in this market that, take a look at, we've been speaking about Teradyne and so many others. Even, some like I brought up TXN last week, and this didn't really get anywhere from when we were talking about this. It was we're in the same place, but the market's been soft over that period of time. And so there's been a lot of stuff that's been holding in well, working strong. I think that's all actually today. I like to look at the market on days like today, which are weak. What some markets where the market is weak, everything is breaking down really bad. Other markets, things are holding in well. If you take a look at some stocks today, like Hudbay Minerals, I mean, these are putting in some really strong sessions. If you look at Freeport McMoran, strong against a bad market tape, and looking at the strength of this prior trend, this is all the give back it gave, despite the Qs going lower. I mean, so this is right back to that shortages. Whether it's the technical shortages or things like, Corning where they're making glass for fiber optics or the rest, or just the actual copper that's going to go in the wall. I mean, these are things that are still holding in, acting well. And just my experience, if you hold in well when the market's weak, you're going to rip when the market rallies. So we'll have to
no, we
see.
talk about that every week, and that's
Yeah.
the point. And I warn that this stuff is working well. So it's like, oh well, this idea of shortages versus versus too much, that's a great idea. That's working well. It's genius. Okay, until it stops working.
Yeah.
All right, until too many people get on it, which they're probably getting to. Look, if I'm on it, then it's got to be close to too many people getting on it because I'm far from knowing anything about this stuff, right? So, I talk about Brazil a lot. The Brazil thing seems to make a lot of sense, right? Based on all this, and has been acting well. We
Hmm.
saw Druckenmiller, that was his number one investment last quarter. That all makes sense. But there are a lot of, and I could even go into and say it can't be crowded because people have been so underweight emerging markets, and I would continue to believe are still very underweight emerging markets relative. Um, that I would be amazed if it was crowded, but there is a lot of talk about this stuff. People are getting pretty excited about it. I hear a lot of
Hmm.
stuff about it now. So maybe, it's time for a pull. I don't know. But as long as it's working, you don't have to worry about it. It's working.
Hmm.
So
Yeah.
ride it. When it stops working, in particular, when it stops working when it should work, then you get nervous, right? And this is where positioning and all that comes into effect. I mean, look at copper today, right? Um, it's crap. Now look at gold and silver. They're ripping, right?
Yeah.
Why is that? I can tell you copper is the single most crowded metal out there,
Hmm.
positioning wise, right? So it should underperform, and it is, you know. Um, Everybody knows that copper is needed. Everybody knows that AI can't happen without all this copper, right? And so therefore they're piled into that trade, you know.
Hmm.
Um, and that's, in my view, why it's outperforming. Look at the Aussie dollar today. This is the most crowded currency out there. Why is it down today? It's the only currency that's negative today.
Hmm.
Why is that?
Yeah.
I'm sorry, the Canadian went negative a little while ago too, which is the second most crowded currency.
Yeah.
All right. And these are the two currencies that are supposed to be correlated to gold and silver,
Hmm.
which are ripping. So why is the Aussie down? And if you look, when we opened up last night, when all the gold and silver were ripping right from the get-go, the Aussie was up a lot last night
Yeah.
and
It did.
failed. It's
Yeah.
failing, right? It made it that high end, and now it's failing. That's Aussie Canada that you're looking
Oh,
at.
sorry. Sorry about that. There you go.
Aussie was up. You saw that big move up, and now it's failing, right? It shouldn't be failing. There's nothing that the dollar is weak. The metals are strong. The commodities are strong. Why is the Aussie failing?
Hmm.
I will argue 11 times out of 10, it's because this is the most crowded currency out there. So therefore, all this news and all that is already in that market. So that's what I think. So these are the things to watch for, all these narratives and people get so caught up on, oh, this guy said this and he was right. so I'm going to listen to him, you know, is the wrong way to go about this. And I'll say that even if I happen to, at some point in my life, get something right, it has nothing to do with me being a genius, okay? And it has nothing to do with my ability to get the next thing right, all right?
Well, it's like you
We
see all the
flipping our
time.
coins, we're gonna get heads.
Myself, I'm like you, Jason. Like most of my trades are losing trades. So if we're going to go just by who's right, by rightness, that's not the way. I don't think that's the way you weight a trading outcome. But to your point, just because someone got it right doesn't really mean a whole lot. And
No, but
anyways,
I mean, like, even the idea about,
yeah,
be long the shortage stuff and short the other shit, okay, that's been a good idea. That's been working. But that doesn't mean that A, it's gonna work forever, and B, the person that got it right is gonna know when to get off the train,
yeah.
right? And see that the next thing the person says is right. It has nothing to do with any of that stuff, right? So the tape is what tells all for the billionth time,
One
right?
thing that I do like to see is, and this is when I was making markets, a lot of it was gold and silver stocks, uranium, oil, all the commodity type of stuff, and it just stands to reason that if the commodities are going to be strong, typically the stocks are holding in better than the commodity. And because they're the high beta thing, it's like why stock traders usually they'll look at the options market. If you're going to step in and buy a whole bunch of stock, you're probably going to go buy some calls beforehand to take advantage of your own tailwinds. And so I've always noticed in really good uptrends and uptrending markets, the miners of their respective commodities will always be doing better on a relative basis versus the commodity. When the switch flips and you're under kind of like a selling downward trend, it's the opposite. They're doing awful. And so one thing that still has me positioned, with a positive outlook for these, if you take a look at the GDX, which is the gold miners, I mean, we're almost at the highs. If you look at GLD itself, we're still quite a ways off of those highs. If you take a look at COPEX, which is, let's see, the copper miners, these are doing really well. I mean, today especially, it's up while copper is down. So it's going to be interesting to see because I know you're mentioning copper is a crowded trade, but the way if I, I'm not a big COT guy, although I appreciate the data that comes from it. But I've always liked to look at that relationship of miners to the commodity, and whether it's gold, silver, or copper, the miners are strong versus the commodity, which is usually not the case when they're under like selling pressure mode. So we'll have to see how this
And
kind of plays
listen,
out.
I would make a few comments on the COT thing. First of
Yeah,
all, the COT doesn't always get things right.
yeah,
Copper could go up despite the fact that it's the most crowded thing, right? It could just go up less than the other things,
hmm,
right? That's really the main thing that COT will tell you, right? Or the COT could just completely have it wrong on this particular thing. It's just like anything else, right?
yeah.
It's a possibility, but it's not guaranteed, right? I'm not shorting copper, right? But and you're right, the miners are doing well. And it's funny, people are talking about how gold is so far off its highs. Gold closed on Friday at a new all-time weekly closing high ever.
Hmm.
So yes, it had that big move down um, a few weeks ago that we all know about. And it's like whatever, it was 8 or 9% off of that high. But if you put the weekly chart up, last week was the highest weekly close ever in gold.
Yeah, that's
So
wild.
how bad is it? That's a different looking chart than that daily chart. That one, you're going to be bearish that chart right there. You're out of your freaking mind.
And it's funny, like you learn differently. When I started out, it was big news at the time because Barrick Gold used to be like one of the big, was still massive miner, but they were huge and they had a huge hedging book back like in the day, and they were always kind of sellers of gold because they had the mining and all this kind of stuff. And then eventually, I think was it '09? I forget exactly when, but it's when this rip started for gold. Let me bring up the actual gold futures. And just to sometimes, nothing is perfect. To your point, that's why you need the tape, you need a bit of everything, right? That's why when gold went on this big move, Barrick eventually, I think they had to even do a massive equity offering to offset their hedges that totally blew up. So for all these miners, and that's what the commercials are for the COT. For those who are unaware of, people look to see what the commercials are doing. And if you're a miner, you're mining gold in the ground, and so you sell futures to offset, to lock in a price to make sure that if things fluctuate, you'll still make a profit. But Barrick was kind of using it also as a profit center. For those, where's Barrick here? It's
Or so they thought.
or so they thought. It worked for many years, and then eventually they got hammered really badly because all of their hedges kind of blew up, and they actually had underperformed so terribly on this run up initially because they had hedges in all their kind of gold production. So just how could the commercials get it wrong? Anybody can get it wrong, and I think
Of
if anyone
course.
wants to look into that, look at the Barrick hedging, the way that blew up. That was a really good example.
And it's interesting what you say because it reminds me of so many different trades, traders, and trading methodologies. They had it right for so long and then it blew up.
Yeah.
That's what happens. All these people put these, you know, these analogs or whatever you want to call these ridiculous things about, oh, the market does this in January 80% of the time, and it does this in February. And if it goes up in January, then it's up for the year 90% of the time. Those things all work great until they don't
Mhm.
work. And when they don't work, they blow you up, right?
And
Uh,
I
we-
find the Bitcoin crowd was really guilty of that because
oh my
I
God.
kept seeing people saying that, on average it makes 70% a year, and these I don't know the stats, and then after now it's a bit less because there's less coins, and if by January it'll be this price. Like, how does that's the number one thing every professional has to say. Past is no is not going to be the future. Like, how could those returns mean that
The
Bitcoin will? I
Bitcoin
don't
crush
understand that
scares the
logic.
crap out of me. They really do.
Yeah.
Because everything that I know about bad trading is what they do.
Yeah.
I don't have a bias on Bitcoin. I'm not one of these guys who says Bitcoin has no value and it's going to zero. I do think that about some of the other coins, fart coin and all that stuff. I do think it's going to zero. Bitcoin, I don't know, but they scare me, especially now. They're really scaring me now.
Hmm.
I saw an interview this weekend. I spend my weekends for whatever reason watching a lot of interviews mostly about AI because I'm trying to understand at least some of it.
Hmm.
But Bitcoin always comes up. And this guy was like, he said that he was panic buying Bitcoin here. And he was like, a 28-year-old kid.
Yeah.
And while there are some people that we can argue have been successful and have been very smart about investing that are involved in Bitcoin, I find most of them are not that.
Yeah.
Most of them are people that don't know anything about investing, especially for the long term, right? And are counting, it's almost like a lottery ticket, right?
Hmm.
They're counting on this being their way out, you
Yeah.
know? And they're just buying the dip and buying the dip, and it can't go down, and this is a bargain. And like I say, they might be right in the end, but they don't strike me as right. And a lot of to me, when I would invest in some private companies, friends or whoever someone was starting a company or whatever. Uh, my big test was always if I looked at the person and said, "Does this look to me like a person that's going to have a lot of money one day?"
Hmm.
You know, and most of the time the answer was no. This guy's an idiot. I've known him since I was 6 years old, and I love him, but he's a freaking moron. You know what I mean? He was a pothead then, he's a pothead now, and you know what I mean. And nothing's changed, and I just don't see how he's going, and he's never succeeded at anything.
Hmm.
So why all of a sudden is he going to succeed at this? That was always sort of my big test for if I was going to invest in something. Or even one time I was interviewing for some jobs, and one of them was a startup, and it was all sort of on the up. I was going to get options and all this. And I was like, I'm looking at the guy who started, and I'm like, does this guy strike me as someone who's going to start a company that's going to be worth $1 billion one day?
Hmm.
And the answer, quite frankly, was no. So I didn't join it. And that's what I'm seeing with the majority, not all, but the majority of these Bitcoin people
Yeah.
I'm looking at and saying, these do not strike me as people who are going to be sitting on $100 million one day.
Well, some guys also like, these are call them promoters now, they call them pumpers, whatever. But like
Yeah.
the Michael Saylor from MicroStrategy, he was talking about like, if Bitcoin goes down to 8,500, we can still convert the bonds and we're fine. First of all, as a convertible bondholder, how do you feel about someone kind of saying like, I'll just sandbag bondholders and give them the trouble if it happens? I don't find that's what I would want to hear as a bond investor in that company. But then, what am I paying this guy for? Why can't I just go buy Bitcoin myself?
Well, you
Why am I
can.
giving him money that he's getting rich off of that he's paying himself for? Why am I paying an intermediary when I can go buy IBIT or some other kind of just ETF that does it for me
It
and I don't have
never
to
made
worry about
sense
it
to me.
blowing up? I
Never
don't know.
made sense to me why anybody buys that one. Why not just buy the Bitcoin yourself?
Yeah.
I don't know.
Well,
That whole thing has never made sense to me, but who
yeah.
am I?
Let's take a look at some actual individual trades. And after, one of the things we want to talk about today are some books that have had an impact on us that I still refer to all the time, but Jason can speak to his as well. I know you mentioned the Aussie dollar. Let me just kind of bring that share up here a second. We can take a look. I don't know if that's the one you want, one of the things you want to go over. I know you mentioned it already. And this is the Aussie dollar, and you can see the red line here, the commercials. I'm guessing that's what you're looking at. I don't know if you want to give some additional comments on it.
Yeah, I mean, look, that's the shortest commercials have been this whole way, right?
Mhm.
And if you go back 20 years, it's getting pretty close to 20-year highs for the shortest the commercials have been. I wanna be short if the commercial gonna be short. I want to do it when the market starts to confirm that. Today, arguably, is a pretty nice confirmation with a weaker US dollar and stronger commodities, which historically the Aussie is somewhat correlated to. Um, Today arguably could be that news failure. Now we do have a Aussie CPI coming out on Wednesday.
Mhm.
So what you wanna see is obviously a stronger CPI, and then the Aussie fail on that. That would be a nice news confirmation too.
Mhm.
If you were to take it the way that I traded, if you were to take the trade today, then I would be stopping out at today's high,
Mhm. A
and
close
that will
above
happen
today's
and
high,
that will
right?
happen to me about 62% of the time that I'll
Okay.
get stopped out. Um, and I will risk whatever I want to risk on a trade. I risk the same. Let's say it was 1%, then I would size that trade from my entry, which would be on the close today, because I like to wait for the close to see if it actually closes down. Um, and my stop I would assume would be the high of today.
Mhm.
And I would size it so that, let's say if I wanted to risk 1% of trade, that would be a 1% loss. And I would have to size it a little bit smaller than that because clearly there's going to be some slippage, right?
Mhm.
So I would size it to lose maybe 85 or 90 basis points. And if I got stopped, I would lose 1%.
Okay. Interesting. One
That's
we're
how
gonna
I
have to
do it.
are there any other, futures you wanna bring up before we head to some stocks, or
I mean, we talked about sugar last week.
let's bring that up. Let's see how
We
that's
still haven't gotten the news failure, unfortunately, but it's running away anyway.
yeah.
Um, but there were other times where sugar went up as well, and it just made new lows. You saw just a few last month, it did that, right? Moved up, and then it made new lows. So the fact that it moved up meant nothing because if you had got long and you were going to stop out at the new low, you would have gotten stopped out. It would have been a losing trade anyway. So
Mhm.
I don't know which way this is going to go. I can't do it until there's some kind of news failure market confirmation event. Other people that I know will trade the COT like this, and then they'll use a price-based thing instead of a news failure-based thing.
Mhm.
Everyone's got their own way. I feel much more comfortable when the market reacts well to bad news.
Right.
COT or not COT. You hear me talk about this all the time.
Mhm.
I need the market to confirm it from a tape reading thing. So that way I have both. I have the tape reading starting to work, and I have a positioning that gives it a great opportunity that if it does start to work, there's a whole hell of a lot of shorts out there that can be squeezed.
Mhm.
So there can be a big move. And that's how you get good risk reward, in my view. So those are the main things I'm looking at. It's interesting because a lot of these commodities have gone up a lot. The
Mhm.
ones that are the most crowded short right now are the ones clearly that have been going down. They might offer some good opportunity here, which is sugar, which is cocoa, which is coffee. Those are really the three most crowded shorts here, and you would understand why they're the most crowded shorts. They've gotten destroyed.
Mhm. Mhm.
Cocoa is a very fascinating lesson. Is that the cocoa chart you
That's the
have up
cocoa
there?
chart, yeah.
I mean, how far back does that go?
Let me take a look here. Can I go back further? 1 second.
I mean, if that's a weekly, that's plenty
Yeah, that's
far.
a weekly. That's a weekly.
So, I mean, up there, you know, um, you can go back and look at the news, and this is why I write my newsletter, or why I used to write it for myself, so that I could always go back and look at what was driving these things. Cocoa at that point, all the news was about how there was this massive global shortage, and there was nothing that could be done about it because it takes 5 years to grow a cocoa tree that will bear fruit. So there was nothing that could be done about that shortage. And you even had Hershey, who obviously is a huge purchaser of cocoa, ask for special from the CFTC. They wanted to buy more cocoa futures than they are allowed to buy.
Mhm.
They were denied the ability to do that, but they were asking for it. So you're like, oh well, Hershey needs all this cocoa. Clearly, cocoa prices are going up. That all happened right at the highs, and look what we've done since then.
They're lucky they got denied.
Huh?
They're lucky they
No,
go
that's right.
tonight.
That's right. But look how much it's fallen since then.
Yeah, yeah.
So it's kind of a great lesson about all this stuff, just the cocoa market over the last few years. But
Mm.
but these are the ones, if you don't want to chase commodities that are already going up, these are ones that are showing huge shorts, so it's possible. Again, you're not going to fight the tape. You're going to wait until these things start to act well in the face of bad news. But these are the ones that have, in my view, potential to have good moves.
Okay, perfect. Let's take a look at a couple of and so also so for the sugar, there wasn't a news failure. Just to kind of we said we'd start tracking week by week some ideas. None of our trades did anything last week that we were looking for them to do. So there, it's a pass on this week.
I mean, the
Um,
cane's gone up. I'm just not in it.
yeah,
I never got the signal to buy it, but I think that CANE's gone up in the last week.
yeah, it did go up in the last week. Let me just bring up a chart here. Let me bring up my daily just to kind of get this back. Well, we're gonna do it like on the street, Jason. We call our own trades. Do you call this a win for yourself? Do we put up on the
No,
scoreboard or
I don't have it on, so how
okay?
is that a win?
Okay,
I mean, it's paper. It was an idea. I specifically said I'm not buying it
right.
yet
You're right.
until
Right.
I get news failure. Well, and look, I miss trades all the time.
Yeah. So we got
But
a double zero on the board so far for week one. We'll see what the market hasn't done a whole lot, but we'll see what comes up for next week. If we take a look at that, one of the charts I'm watching very closely, and I've already spoken about this a couple of weeks ago, is this relationship of the XLP versus the triple Qs, which is kind of one of the things I like to look at of whether it's an easy or a hard environment to operate in. So XLP is a consumer staple. It's been crazy strong. Last week was the first time we saw this kind of underperform the Qs for 4 straight days, but today's a big day of outperformance. So I'm watching this very, very closely because when this finally breaks, this is a relationship that I think will kind of make it easier to make some really good money across all stocks. But in the short term, in terms of stocks to watch, let me just bring up my other chart here. Oh, this didn't save. There's a number of stocks that I've been focusing on. The Freeport is one of them that's very strong. If it can get a close above here, if we look at close only prices, similar to kind of the gold chart, this has really been the line in the sand is 65.50 or what. If we can close above there, I already got some of this on, not a lot, but started putting some of this on. That's where I'd get more aggressive as well. So something to kind of watch there. Watching Hut Bay Minerals, this had a really nice kind of pullback. We had earnings. This is kind of doing phenomenal. I have some of this on from this morning too. This is doing really well today compared to what the market's doing. So I know the trade's crowded, but still looks strong on a relative basis for me. So these are two I'm watching instead of all the other AI stuff, which we kind of talk about
I don't
regularly.
know
But
if
these
this
are two.
trade is crowded.
Sorry.
What do they do? These guys.
Oh, they're copper. I mean, they're a little
Okay,
more of a
but we don't
mix
know
than
if the
Freeport.
stock is crowded. We know that relative to gold and silver, the
Mhm.
future of copper is crowded relative to gold
Yeah,
and silver. But we don't know if the stock trade is crowded. We don't know that,
yeah, that's true. It's a good way to put it. And they've been holding in well versus the commodity. So
which
these
is
are
the
two that
most
I'm
important
watching in the
thing.
short term. But for our fun tracking, we'll keep an eye on FCX, a little less jumpy and volatile. We'll see what those kind of do going into next week. So we'll switch gears just a little bit. There's something I thought it'd be fun. 'Cause I always get this question, what kind of books do we read and all? Obviously, the market
Wait, so
movement.
is that your trade for the week? I
Yeah,
think
so
just
FCX.
just for the record, I think it's a terrible idea, but I'll do it for the fun of it anyway. Because if we get it right, then people are going to overestimate our ability. And,
I'm
and,
right.
and if,
I'm wrong most of the time. So
no, right. And if we get it wrong most of the time, like most people do, then people are going to think we're complete freaking morons. So it's not a great idea, but hey, let's have fun. My trade is Aussie, by the way, short Aussie.
Ozzy, do
All
we
right,
use
market.
failure or just a close below somewhere on if a
I think
close
today is a news failure.
there's a
So I'll
news
use
failure?
today as the news failure. And I'll pray that CPI doesn't, Australia doesn't blow me out on Wednesday. And to me, that's my best risk reward trade here.
Okay, I'm gonna look for FCX. If we can make a new closing high, I'll call that as my my entry. So we'll see if that can give that to us. Yeah, I agree about the tracking, but just to have a little bit of fun. We know that's not the real way trading works, but just to follow some ideas week to week. We'll see how they kind of do.
Yeah.
So speaking to different books, do I
Can
still
I go back and say VRT was my trade from a month ago?
No. We can't do any of that.
We
That's not
can't
allowed.
back. Come on, man. Retrospect is the best kind of trading there is.
I have GLW. I have others there too, man. So we have to put those up on the board.
I crush it in retrospect, man. Like I'm one of the best retrospect traders alive. Anyway, go
Um,
ahead.
So for books, I have to, I'm going to mention Market Wizards because I'm with a freaking Market Wizard. But before I talk about what I like to read, what does a Market Wizard actually want to read? I'm curious. What has been a big influence on you? I know the Wizard books. I've heard you mention yourself, or I've read you say in the.
I will say again, as far as trading goes, the first three Market Wizards books, which I was not in any of those, right? So there's no bias here. Market Wizards, New Market Wizards, Hedge Fund Market Wizards. I think everything you would ever need to know about trading is in those three books.
Mhm.
Everything that we talk about is in
Yeah.
those three books. Everything. Even using different methodologies, right? All these ideas we talk about, you with the relative strength and all that stuff, and all the stuff I talk about, the news failure and the market needing to, how it reacts to different news and all that. It's all in those books, everything and more, by the way. Um, to me, those are the greatest three books there are. And really, in my view, the only books that you would ever need to read about trading. I've read hundreds more than those, right? Um, but I would definitely recommend those three. As far as today goes, if you want to try and get a grip on what the hell's going on in the world,
Mhm.
which maybe is a bad idea as a trader. The more the more you're going to overthink things. But I think the Ray Kurzweil books um, are extremely
What's
important.
what's the name of the book?
Uh, so Ray Kurzweil he has got a few books, but it's the
How do you spell his name? Sorry, his last name. How do you spell that?
Kurzweil, Kurzweil.
Oh, here we go. Okay, I'll just share this. I'll bring this up here.
So, the singularity is nearer, I believe is his latest one on this. This guy is, his first one, I think, was the singularity is near. Here, I'm just looking. 2005, the singularity is near,
Right.
which talks about AI. Singularity is near came out in 2024, which was the update to it, right?
Mhm.
Um, if you read about who Ray Kurzweil is, this guy truly is a genius.
Mhm.
His parents were, just as an example, his parents were, and I might get some of this wrong, but his parents were musicians. And when he was in high school, he invented the Kurzweil organ, which was, and to this day, is still the standard of what an electric organ is,
Mhm.
right? He invented that in high school.
Wow.
And then he went on to do all kinds of stuff. And look, this is where I might get it wrong. Maybe not the head of AI, but a consultant to Google, the top consultant. He never worked for Google because they couldn't afford him, I assume. But the top consultant for AI. And if you go through that book, right, what you find is everything that these people are doing is following his outline. All the shit that Musk does between space, you know, and rockets and AI and all, they read this book.
Mhm.
I'm telling you, because that's
Mhm.
all they're doing.
Mhm.
He talks about this in the first book in 2004. He
Mhm.
talks about all the stuff that Musk talks about and is doing. I can tell you, I can't tell you because I never asked Elon Musk, but they match with what Kurzweil was talking about in
Mhm.
2004. Did he get it from there? Nah, maybe they came to the same conclusion independently, but I don't think so because I've heard Musk talk about Kurzweil anyway, right?
Mhm.
So I know that there's a reference. If you look at the movies like we've talked about, right? That have sort of foreshadowed a lot of this stuff. The Matrix, the Terminator, right? Even that Tom Cruise movie where he
Oh, yeah, what's it called? Where it's like a pre-crime. What's it called?
yes, exactly.
Yeah.
Even that movie, they reference the Kurzweil books in
Mhm.
those movies, right? So if you wanna try and get a grip on this AI shit, I think those are extremely important, good books to read.
Okay, very cool. Anything else market related that you would point to besides
I
no?
mean, if you're into technical analysis or whatever, then, you read the Murphy book or the Edwards McGee stuff, right?
Mhm.
That's all you really need for that. Um, but as far as trading goes, I really believe the first three Market Wizards books are all you will ever need. And I think that you'd be better served reading those three books 10 times each than you would by reading 30 different books.
I agree because, and that's something I look back. I think we're all we're so much the same more than we realize. Not you and I, but so many who love trading. And I read hundreds of books too. I have my wife still gets mad at me if I buy a new book because they're all like lying all over the place. But it's like, you're trying to discover what works, so you wanna read a little bit of everything, but at the end of the day, it's like same for myself, some of them are just like wild goose chases that pull you in different directions that don't suit your personality, and you don't know that until you read it and you try things, but looking back, if I could just read 5 or 6 books, I think that would probably be the, would've had me much further ahead by now if I would've done it that way.
And we have, I'm pretty sure right on our webpage of
Mhm.
crowdedmarketreport.com, we have a list of books that people I put as my favorite books and what I thought were the books, and what other people in our community also thought were very valuable
Mhm.
books. A lot of these market psychology books, and that you've probably heard on most of them, but we have a whole list of books on there too if anybody wanted to look at it.
One, speaking of market psychology, Mark Douglas, I'm sure this is probably one everyone points to. I enjoyed this book too. It's a
Yeah,
little bit dry, but it's a good book. Trading in the Zone is one I wanted to kind of bring up. I thought would be a good one to point to.
yeah.
You mentioned Murphy, John Murphy. There's one book he has his popular um, technical analysis books, but one that I liked was this one here, which was intermarket analysis, which is for those who don't know, like, we speak a lot about, the Aussie and this, all these different things. And I used to trade commodities as well, not to the extent that you do, of course. But, what I liked about this book, I got through my economics undergrad thanks to this book and his other book, because I just, a lot of times I wouldn't even answer the question on the exam, but I would just be able to speak to these intermarket relationships that I learned from his book. So it's a cool combination of like technical analysis and economics. So someone who wants to kind of learn how markets will react and how to use like a relative strength ratio to get a sense of who's outperforming, underperforming. I thought this one was really good. Um,
I'll say about the other one, technical analysis of financial markets.
yeah,
That thing's a beast.
yeah, it's good.
And the thing I love about that, and I don't trade based on technical analysis, but I did read that book early in my career, and I went through it a few times. Is it at least helps you understand, because what I notice, for example, he talks extensively about how important volume is in confirmation of these technical analysis patterns, right?
Like a Head and Shoulders. Like there's a volume
Right.
profile to that too.
Yes. Whereas most of these people on the internet that are talking about, hey, there's a head and shoulders here, or there's whatever,
Mhm.
they don't use volume at all. So
Yeah,
they're not even doing it right. You know what I mean? Not
yeah.
only are they full of shit, they're not even doing their full of shit right. Is what you can learn out of the Murphy book, right? Even things like he talks very clearly a trend line, right? He says it right in like the first 10 pages. Trend line has to capture all of the price,
Yeah.
right? Movement. You don't draw a trend line in the middle somewhere and say, okay, no, you have to take the low of the move and draw the trend line from there. And it's not 2 points on a chart. It's 3 points at a minimum,
The
right?
third confirms the trend line, or else, and you can
Right.
put 2 points anywhere on a chart. I
Right.
100%
But that's
agree.
what these people I
Yeah,
see on the internet do all the time. They draw these
yeah.
trend lines that don't include all the price action. They draw these trend lines that are just 2 points. Like,
Mhm.
so the great thing I think about that Murphy book, for me at least, was you can see where all these other hacks are doing it wrong.
Yeah,
That
yeah.
Murphy book is, as far as technical analysis goes, and like I say, I'm not even a technical analysis guy, but that's the Bible to me.
Well, like when I started off, like early on, like I was, I have my CMT, which is like the technical analysis designation. And like, so when I started, I was really knee deep into it. And I got to meet a lot of the guys, like even guys like Ralph Acampora, who's one of the founders of the CMT. And like these guys were really precise and they had real passion about what they did. And I find that's one of the frustrations today of, obviously technical analysis, anyone could make an indicator now in trading view or draw a trend line. And so it's one of those things like there's no barrier to entry to kind of form an opinion. But to do it properly, that's why the CMT, there's 3 exams. Not that you're a master trader when you pass 3 exams, but it's just to know that you understand like the points that you're a passionate guy, so you've read these in detail, but to show that you understand the actual stuff behind it, like Dow theory. What is Dow theory? Why does that work? What's that those relationships of the industrials and transports? That same relationship we're talking about with miners versus the commodity. These are the core things that people should understand properly. And a book like that teaches it, you know?
And it's funny because, like I say, I don't do technical analysis. I've done videos where I've pointed out the fact that I think technical analysis is bullshit, and I've given some examples of why that is. And this last weekend, I did a video of why I think technical analysis works and how it can work, right?
Hmm.
And the point being that my conclusion was anything can work if it helps you with riding gainers and cutting losers, and sticking with the market, confirming what you're doing. So like a technical analysis, 200-day moving average. Okay, well, if you're only buying things that are going above their 200-day moving average, well, then you're buying things that are going up. And that's
Hmm.
the market confirming. So that's nothing but good. Okay.
Yeah.
And if you have trend lined and it breaks below that trend line and therefore you're getting out, you're cutting your loss, well, then that's good. Anything that helps you do those things is good,
Hmm.
right? And can work. I think that's, and by reading all these books, while I don't use it and I don't, it helps develop. So when I first said, all you really need to do is read those 3 books, I take that back, because if you read these other books as well, all these things slowly, these people that argue fundamental analysis, technical analysis, tape reading, not tape reading, to me, it's so stupid.
Yeah.
Why wouldn't you want to use all the things that are at your disposal? Why do you have to just stick to one? Like, well, what are you trying to prove? Make money is what you want to do, right? You're trying to prove shit. Like, what are you proving? So the more knowledge you have, the better. You can throw away some that doesn't work for you and keep some that does work for you, or take some from here, some from here, some from here, some from here, right? Like, again, in this video this weekend, I was talking about the fact that, hey, to me, okay, here's a breakout in technical analysis. Great. But a breakout is not the same as another breakout, is not the same as another breakout. A
Hmm.
breakout that happens on super positive fundamental news, to me, is not the same as a breakout that happens on no news. I would much rather have the one on no news, right?
Hmm. Hmm.
Than super positive. I mean, the market should go up on super positive fundamental news. There's no value there to me. Whereas if it happens on no news, to me, there's value there, right?
Which, that's to your point, like the chart pattern, like they were saying in the book, like the volume profile is an element, like the news
Right.
context is another element, which is a helpful way to look at it.
Right. So I take back what I first said. Read as much as you can, actually, and take a little bit from each. The more knowledge you have, the better.
Another book I really enjoyed, I don't know if you read this one, but You Could Be a Stock Market Genius Too by Joel Greenblatt. I thought
I've
that was
never read it.
interesting. Yeah, it's a good read, and he talks about how uh, he talks about a bunch of different things in the book. But one of the things that he kind of comes down to is he would show how if you could focus on important corporate changes, one like he would mention on that always stuck in my head was a company that goes through a split is a really bullish thing because no CEO ever wants to kind of rule over a smaller kingdom. If they're splitting the company, it's probably because they see value that the market's not rewarding. They really want to unlock it. And that's kind of what's always helped me to kind of find some of these real gems that come out sometimes. Like GE Vernova, GEV was one of the biggest trades I had in 24 and 25. That was, GE spinning out into 3 different companies. There's more focus. It's a better way for investors to understand. Same with Viav, which has been strong lately, and LITE, Lumentum. They've been on fire. They're JDS Uniphase, the old big kind of tech name from the 90s that were split up into 2 companies now. And so he talks about these different types of scenarios where you can look at what management is doing with the share structure itself and how that can often have bullish implications. So it's not something I don't trade that way. But again, to your point, it's like stuff that will kind of filter through your mind. You're looking at companies like, oh, this is a spinoff. Interesting. Why did they spin it off? What are they doing? And it sets up some nice opportunities sometimes. So this is something that I've enjoyed that book.
Reminds me of my professor in business school. It was like such a classic British professor, you know what I mean? Never spent any amount of time outside of academia. And it used to piss him off that stocks that have split have proven to have better performance post split than the market. And it used to piss him off so
Why?
much.
Just buy them and make money. Why is he
No, that's
angry?
right. But he's supposed to, because it made no sense, right? Just because
Okay.
a stock splits doesn't mean anything, right? It doesn't change the value of a company. It's just you got twice as many shares at half the price. There's no difference, right?
Oh, so I don't mean, sorry, I didn't mean split. I meant spin-off. Apologies. Maybe
No,
I
but
said
I
it wrong.
like split.
Yeah.
It's the same thing, right? So it used to piss him off so much. And it's like, well, and in fairness, he did point out, but there's signaling, which is what you're talking about,
Yeah.
involved too, right? It's signaling something, right?
Hmm.
If the CEO is confident enough to split the company, right? To split the stock, then he probably is more bullish on it. It's probably a bullish thing for the future, right?
Hmm.
Yes, mathematically it means nothing, but
Hmm.
there's probably a signaling effect there.
Hmm.
Is the truth. But anyway, it just makes me laugh because I think of my professor and how it used to make him so mad.
There's another good book here. Fellow market wizard here, Tom Basso. This is, if we take, where's his book here? The All Weather Trader. I really enjoyed this one. It's a book for anyone who wants to kind of, you bring this up a lot. We talk about this, Dahlia would talk about having these differentiated kind of trades on, or you mentioned different types of systems. And that's what Tom does. And Tom's a super authentic and nice person. And this is a real good book, The All Weather Trader, for someone who wants to be a little more systematic, or you want to think about how can I combine, my long-term portfolio with a short-term portfolio? How does that impact me? It's a little more advanced discussions, but I thought that was a good book. Not sure if you read that one.
I haven't, but I've talked to Tom Basso. He's a good guy.
Yeah.
He's real.
Uh, there's another one here, The Hour Between Dog and Wolf. I don't know if anyone who's watched this has read this, but he was a trader who became oh, John, what kind of doctor was he? A doctor of the mind. I forget exactly.
Psychiatrist,
No, it was anyways.
neurologist.
Yeah, I think a neurologist, if I'm not mistaken. So anyways, this book's really cool. And it reminded me of myself because he talks about all of the physiological changes your body goes through as a result of trading. I think he was a top trader at Goldman. I
Oof.
forget now if I'm getting it wrong, but he was somewhere and he switched and he became a doctor. Unfortunately, he passed away recently. I wanted to actually have him as a speaker at the conference last year. And when I was
Hmm.
looking him up, he had passed away. But it's a cool book. He talks about how the cortisol it releases in your body under stress and how it impacts your mind and all this kind of stuff. So it's like, I mean, I was picturing myself on the trading desk back in the day and these sensations and how you get tired after. And really cool book to kind of talk about how what we're going through. We think it's just like a mind business, but physically, all the stuff that's going on, which is links to our fear and our greed kind of mechanisms. Really cool book. Even for you, Jace, if you haven't read it, it's a good book to kind of check out.
That sounds interesting.
Yeah. Another one for those who haven't read it, it's a little bit out of date now, but Martin Zweig has his book, Winning on Wall Street. Where is it here? This one here. Like he talks about like different like Fed models and things. This one I was starting out, we always kind of read the Federal Reserve is important and all the rest. The way he kind of put some stats behind it in place. And he talks also, he was very much like, don't fight the tape. He'd have like Fed models, but then he would time it with like the actual price action to kind of make sure it was going his way and whatnot. So that's a cool book if you want to understand how to kind of look about building a model, let's say about the Fed and how the Fed impacts things. And then some really basic kind of price things he used to put together. So that's a cool book. Not sure if you read that one.
I will
Eh,
throw in now that we're getting into it.
yeah.
This is a book. I really have not read a lot of market related books in the last 5 years or 10 years or so, because I just do what I do at this point. But I was turned on to this book called "Why You Win or Lose: The Psychology of Speculation" by this guy Fred Kelly.
Okay.
You could read this book in 45 minutes. It's like, I don't know, 60 pages or something, and it's a very small book, and it was written. I love it because Fred Kelly was not a market guy. He was an author. Up to that point, I think his most famous thing was he did the biography of the Wright brothers,
Mm-hmm.
and he was in the 20s. So, the stock market became this huge thing in the 20s, obviously. And he figured he'd write a book about it. So he got in the middle of it all and, lived it for a couple of years and then wrote this book, Why You Win or Lose: The Psychology of Speculation, which I really, like I said, you can read that in an afternoon, but
Check that out.
really, really enjoyable book. And just to bury the lead, his conclusion was the only way to win at this thing is to do the opposite of what everybody says.
Oh, that's why you must have read it early on. It influenced you.
I just read it like last year.
Okay, okay. Cool. I gotta check that out. Some of these old books are so interesting to read, It's yeah. Another one that stands out to me, this one here. If sometimes these books can get a bit dry, but there's The Perfect Speculator, which is like again not a long book. You can kind of read this pretty quickly, but it kind of tells like the basics of trading. It's kind of like reminiscence of a stock operator. Obviously, I think most people know reminiscences of a stock operator, and I think to Jason's point, it's a great book about Jesse Livermore, and I love it. One of my all-time favorites. The bad element is, he ended up committing suicide. So there's
And people
the
have to remember that. It's such an
yeah.
enjoyable book, Remnants of the Stock Operator, because it's funny. And the idea of, hey, the boy plunger, and he was young, and he made all this money, and all. I've said it before. My son is named Jesse. Okay. Um, and when I was in Hong Kong, they used to call me the boy plunger.
Hmm.
Uh, but keep in mind, this guy died broke and via his own gunshot wound. I
Yeah.
think you got to keep that in mind. It's enjoyable, and all the swinging around and all the volatility that he had, and it makes for a great story. But just keep in mind where he ended up.
I think the biggest takeaway from him is because so many of the principles he talks about, I think, are the core principles. And this book's like 100 years old. And to Jason's point, if you want an interesting book, this has to be, I'm not into fiction, but this has got to be the most interesting book I've ever read, is Reminiscences of a Stock Operator. And so many important lessons are in there. It's just, I think a good lesson that maybe he didn't intend to make is you can trade, but you don't have to trade to the point where he went bankrupt like 8 or 9 times. He then also made like hundreds of millions of dollars in the short order. Like, yeah, like there's life is all about, sometimes just having a nice life. And if you want to live at the extreme, there's the repercussions of that, but that doesn't take away from the lessons of it. So I think if you just watch it with the
No,
asterisks,
and look, there's a great lesson in that by itself.
exactly,
He
exactly.
knew he knew all the lessons, and yet he still failed in the
Yeah,
end.
yeah, yeah. And so if we go back to The Perfect Speculator, it's something like similar to the Livermore book in terms of like how it's a story and all that, but really a lot of good lessons in that one there. For people who want like a little more of a lighthearted read, I think also there's the Darvis book. I don't know if you've read the Darvis book, How I Made $2 Million in the Market. Where is it here?
I have not.
Yeah. So he was very much kind of like, he was kind of like the Peter Lynch type of guy of his time, where he found a way to the box theory, basically bases, and if it breaks out, he holds it. And if it breaks down, he sells it. But he
Didn't
kind of
the
tells
other
a
guy
story.
write How I Made $1 Million in the Market?
Is there a guy who wrote that?
I thought Larry Williams' book was How I Made $1 Million in the Market. And
Larry's
then
got a
this
lot of
guy
good.
comes out and does a How I Made $2
No,
million.
this
Why
guy's
not? You
before.
should write another one. How I Made $3 million.
Larry, if anything, copied Darvis, because Darvis is from like the 50s or 60s.
Oh, oh,
Yeah.
it's like something about Mary. 6-minute abs.
That's a good movie. Oh man. Last up, just I'll just put it in. I'm sure most who are watching will know of it, but this is the book that kind of got me to fall in love with trading.
Oh yeah,
It's the backbone of everything I do.
yeah.
It's the only, if I have to say, I can only say good things about this book. If I have to say something bad about it, is that you'll walk away thinking it's easier than it actually is, because Bill starts off the book with all these incredible companies that are life changers. It really, if you nail one of these companies with size, you don't need, that's all you need. But um, he points you in all the right direction. I always say the only bad thing about this book, it should have been a 10-volume set, and it would have maybe been a little more complete. So great book for people to read. But that the only asterisk here is it's like every book. It's just like the technical analysis book. No book is a complete system, and you have to kind of round it out and make it your own and add your risk
And by
management.
the way, when I say that Market Wizards is the only 3 books you need to read, keep in mind there's a chapter in Market Wizards with, not only is there one with him, there's also a chapter with David Ryan, who
That's
was,
right.
his number 2 guy. So there's 2 chapters in
Yeah.
the Market Wizards about Bill O'Neill. So
Yeah.
I agree that it's great stuff.
Yeah.
And I love what he did. He didn't go in with a bias, is what he talks about, right? He went in and he tried to look at the stocks that went up tons, 10 times,
Hmm.
20 times, and tried to find the thing. He went and said, what could I have seen in all of these things before they took off? What
Yeah.
did they all have in common before he took off? So then I can look for those commonalities now to find the next ones that are going to do that. That's good research
Well,
to
and he
me.
was a realist. It's like, we were joking about your professor where he was angry that spin-offs would outperform the market. But a guy like Bill, if you're a trader, he did it right. Say, okay, great. I don't care if it doesn't make sense, or for whatever, I'm not understanding why the reasoning is, but I see that
Right.
it's happening, and those
Does it
I'm
work?
going to focus on, and that's it. So
That's like my big tagline, right? Be wrong, make money. Who cares, right?
well, he has all these good quotes, Bill. Like, the only good stock is a stock that goes up, and all this kind of stuff. And it's
Right.
true. It's a pragmatic and a realistic way to approach markets, which so many people don't realize is such a big part of the business when they kind of start off. So another great book here is Bill's book. I can't recommend any stronger if anyone wants to have a read. So with that, anything else you want to add before we kind of wrap up, Jason?
That's it, man. That's really it.
All right, cool. We'll follow up next week. There's a whole bunch of I want to talk to some other kind of biases and mistakes that people often kind of do unrealizing, but we've already gone a little bit longer than usual. We'll keep that for next
Yeah.
week. We'll see how FCX does. We'll see how the Aussie does. And we'll be back here same time next week. Thanks so much, Jason. Always
Cool,
appreciate it.
man. Have a good week.
You too. Thanks.